Hello, everyone. I'm Matt Clark, research analyst with Money Markets, here with your weekly marijuana market update. Now, again, before I start, like I do with every video, I do want to make sure you're heading over to moneymarkets.com and signing up for our free daily e-letter. From Sunday to Saturday, you get a free e-letter sent directly to your email for free again. Contains safe, profitable investment information from myself, from Green Zone Fortune's co-editor Charles Sizemore, our chief investment strategist Adam O'Dell, and many others. We want to make sure that we're helping you be smart, be safe, and keep things simple when it comes to investing in your portfolio. So go to moneymarkets.com and sign up for to get that safe and profitable investment information each and every day for free. Now, for today's update, I'm going to dig into our email inbox at feedback@moneymarkets.com. Martha wrote to me recently, "Hi, Matt. Could you do a video about KHRNF? That's KHRNF, please. Khiron Life Sciences Corporation, formerly Adent Capital Corp, is a Canada-based company engaged in the alternative medicine sector. The company is an integrated medical cannabis company with its core operations in Latin America. Khiron is active in the research area of medical cannabis. It develops and commercializes medical cannabis products, mainly in Colombia. Love and appreciate your videos. Keep up this great service, Martha." Well, Martha, again, thank you for writing in. I love getting emails and comments on YouTube and all that kind of stuff. I try to look at each and everything that people write, and I try to respond. It's difficult, but I do appreciate it, and I'm more than happy to spend this marijuana market update looking at Khiron Life Sciences Corporation. It trades over the counter. The ticker symbol is KHRNF. We'll try to put that down below so it's a little easier. It's hard to spit out 5 letters and hope you guys understand that because I can kind of be a little fast. But Martha is correct in that Khiron is an integrated cannabis company with operations in Latin America, but it also operates somewhat in North America and Europe. It does specialize in cultivating, producing, and distributing both THC and CBD medical cannabis. Khiron operates various health centers under the ILANS, I-L-A-N-S, and Zerenia brands. One of those Zerenia clinics is actually located in Medellin, Colombia. The company also develops CBD-based skincare products under its Cuda brand. Its medical cannabis sales currently are limited to Colombia, Peru, and the United Kingdom. The company has said it's filled more than 10,000 medical cannabis subscriptions in Latin America year to date. Khiron is also eyeing expansion of its medical cannabis sales into Brazil and Germany, as well as CB sales expansion into Hong Kong and Spain. Now, it also looks to expand its physician training and health services into Mexico and Germany. Now, in looking at the company's financial position, there's a lot of red ink here on the ledger. I'm not going to kid around. It's a lot of red. Khiron's net income actually got worse from 2017 to 2019. As you can see, Khiron's net income went from minus 4.5 million Canadian dollars to a whopping minus 36.4 million in 2019. Those are pretty staggering losses, and it's thanks in large part to the Latin American lockdowns due to the coronavirus that carried over into 2020. The markets weren't nearly as open in Latin America as they were in Canada. Now, I know the 2019 figure is a little bit deceptive in that, the lockdowns didn't occur until 2020, but those losses still kind of carried over. As you can see, in 2020, losses were around a minus 27 million Canadian dollars. Now, you can see the company is projecting to turn those losses around over the next couple of years. By 2022, Khiron is projecting net income losses of just negative 5 million Canadian dollars. Now, that's not bad. It's still losses, but if you look at the past, considering 2019 and 2020, a negative $5 million loss is much better than a minus $36.4 million loss. Now, one bright spot for Khiron is its projected total income over the next 2 years. The company brought in around 900,000 Canadian dollars in total revenue in 2018, increased that to 9.6 million in 2019. Now, you can wonder, well, why were the losses so great when they actually increased the income? Well, you've got R&D, research and development expenses, you've got marketing, you have also increased product, things like that. That's all going to relate back to take money away from that total revenue. So you can have sales, but you're going to have a lot of extra things going out, especially in terms of research and development, the recent expansion, any acquisitions, things like that. That's all going to eat into that total revenue, which is why their losses were so great, because a lot of their expansion was done in 2019 when they moved into parts of Europe and expanded a little bit more into Latin America. Now, the impact of the coronavirus, you can see in 2020, the company's total revenue went from 9.6 million in 2019 to 7.6 million in 2020. But the company is projecting total revenue of 34.5 million in 2021, 97 million in 2022. That's a 10,600% increase from 2018. That's pretty massive. And it's great news, but remember, these are projections, and they're pretty lofty ones at that. So it's a huge goal to try to meet, and I'm not sure if Khiron has the ability to meet that expectation. You can get a good picture when we look at it, when we examine the earnings per share projections as well. The company lost about 41 cents a share in diluted earnings in 2018, cut those losses in half by 2020, only lost about 24 cents a share that year. They're projecting to cut 2020 losses in half this year, whittling them down to around 12 cents per share of losses, and then down to a loss of 4 cents per share in 2022. Still losses, but not nearly as bad as they have been. So the news is the company is expecting a much better financial picture over the next 2 years, but it still translates to a good bit of losses for the company. In terms of its stock price, Khiron hit a bottom of around 26 cents a share in March during the coronavirus crash last year. By June of 2020, that company rebounded and hit a massive 52-week high of 60 cents per share, 131% increase in its share price in a very, very short amount of time. Most cannabis companies took a lot longer to hit 52-week highs. Khiron did it in very short order. However, unlike a lot of cannabis stocks, the price took a nosedive in the summer. It went even lower after the November 2020 election. You remember a lot of the cannabis stocks that I've talked about, they saw a nice boost up after the 2020 election because of the expectation of potential federal decriminalization, possible federal legalization of cannabis, with Democrats taking the White House, the House, and maintaining control of the House and taking control of the Senate later in January. But the losses for Khiron actually got deeper after the November 2020 election. They reached as low as 27 cents a share in late December of 2020. That's kind of unheard of when it comes to, if you look at the entire cannabis space. They're not the only company that lost, but those losses are pretty remarkable in terms of share price, and especially the time frame and in relation to what other cannabis companies were doing at that same time. I'm really concerned over the limited expansion this company is undertaking as well. It does well in the medical cannabis space, but it seems to be the segment that it plans to expand the least over the next couple of years. It's focusing more on its physician training, its medical services it provides. It's doing a little bit in terms of CBD as well, but I'm just not really sure if they're focusing on the right segment. They may know something I don't, but it just seems odd that you would not expand one of your two most profitable segments more than you would your least profitable. However, the physician training and medical services that they're providing could create inroads to either offer CBD or medical cannabis products in the countries that they're expanding into in the future, but I'm just not sold on that yet. This will be a stock, at least until the stock price finds more solid footing and they get a little more aggressive in the medical cannabis space, that I would stay away from. So I'm just not there yet. Maybe if the stock price turns around and we see a little bit more of an uptrend and more of a solid uptrend instead of the bouncing between 60, 55, 50, 45 back up to 50. That's a pretty big jump. I mean, I know it's a nickel, but still, that is a lot of volatility, and especially for a stock that has not moved as upwards as other stocks in the cannabis space have, especially at the end of the year. So I need to see more solid footing. I'd like to get a little bit better idea in terms of the expansion plans, especially related to medical cannabis and to CBD, before I even think about telling you this stock is one you might want to look at. Right now, that's a no-go for me. Now, coming up this week, we're going to have much more. We'll have our Bull and the Bear podcasts, as well as the Money and Markets week ahead, so make sure you stay tuned for that. Also, check out moneyandmarkets.com each and every day for new content that provides safe, smart, simple, profitable investment information for you. Sign up for our free daily e-letter as well. Until next time, I'm Matt Clark, research analyst for Money Markets, host of the Bull and the Bear podcast, the Marijuana Market Update, and the week ahead. Until next time, everyone, safe trading.